what we find is when Bitcoin price is low, like now, there's very little interest to talk with us. When it's up, then there's interest. Bitcoin is 63, whatever, 63, 64. There's no one lining up there. Bitcoin at 150 or 250,000, long line.
Samson Mow hasn't backed away from his Bitcoin thesis, not even as the market tests investors' patience. While fear continues to dominate the headlines, he argues that Bitcoin is quietly building one of the strongest fundamental backdrops it has ever had. That's a bold claim, but it's difficult to ignore what's unfolding. The passage of the Genius Act and the Clarity Act, growing institutional demand, expanding sovereign interest, spot Bitcoin ETFs, and stronger regulatory clarity have all shifted the conversation in ways that barely existed just a few years ago. Critics still expect another major collapse, yet Mow believes that outcome becomes increasingly difficult to justify unless Bitcoin's long-term power law completely breaks down. Whether you agree with him or not, the debate has become impossible to dismiss because the facts are evolving. So, is the bottom already behind us? Or is the market still underestimating what's coming next? Listen to more clips from the interview.
You recently said that you think the bottom's in already. Why do you think that that's the case?
I'm always bullish on Bitcoin. Second, it doesn't make sense. Like, why would it follow perfectly the schedule? I mean, a lot of people expect it to, and I think it's a self-fulfilling bear market in that sense, where people are expecting the bottom in October, and they've sold, right? They're preparing. But, Bitcoin has a habit of doing what you least expect it will do, and I think people are going to be surprised very soon. But third, we're already at the 200-week moving average, and we've never broken below that for any significant amount of time. And that there's also the power law that's showing, time is not on your side. As time progresses, Bitcoin does tend to follow a power law model, so it should keep going up over time. So every month past now, I think, is moving into recovery territory, if not, straight vertical to the moon movements. But the other reason I think this time is different is because this time is different. If you look at the Bitcoin treasury companies, if you look at the ETFs, they've largely added additional shock absorbers to the system. If they didn't exist, maybe we would have crashed much lower with this last crash, which, if you think about it, there was really no reason. Like, what was the trigger event? Nothing really blew up. We just kind of went down and then down again. And then, why are we here at 63? Nobody blew up. There's been no tragedy, no bankruptcy, nothing. So the supply of Bitcoin is limited, and all of these entities have been buying nonstop. And it's not just them. There are many more entities buying Bitcoin than the publicly listed companies, right? But I see it as sort of shock absorption. Like, the ETFs, they will only go so low because people won't sell below their cost, because a lot of that money is long-term capital. And the treasury companies are also shock absorbing too, right? And they're also holding still. So I see it as a very different structure these days than in the past, where you might have had Bitcoin slide 80% because nothing else existed to shock absorb. But we have a lot of shock absorption right now, which I think stops it. So we'll see. Nobody knows for sure, but I would honestly be very surprised if we went lower now, because that would break, the 200-week moving average standard, and it would probably push the power law out of its comfort zone.
Have you ever stopped to ask yourself a simple question that could change the way you see the entire financial system? Is Bitcoin actually money? It's a debate that has divided economists, investors, and governments for years. While critics argue that Bitcoin is too volatile to function as money, supporters point to its scarcity, decentralization, growing institutional adoption, and expanding role as a global store of value. Samson Mow believes the answer is becoming increasingly obvious. and he explains why Bitcoin may already be evolving beyond a speculative asset into a new form of money. His perspective challenges conventional thinking without ignoring the realities of today's market. Listen carefully to his insights before deciding where you stand.
We need a stable ossification-leaning implementation because Bitcoin is first and foremost money, and you don't want to play with the system and software and network that enables the first sound money that we've really ever had in the world, that is better than gold, better than anything, because it's information and it's bearer.
Can I ask you a question about that real quick?
Sure.
How about we don't try to like change it and increase the functionality and add data storage as a feature of Bitcoin, yet we preserve it as focusing on it only being money? Does that seem right to you?
Yes, I agree Bitcoin is money, but it's not about whether you want Bitcoin to be money or not money. Money is an emergent property. Bitcoin, first and foremost, is software. So, but Bitcoin is money is an emergent property of Bitcoin. If you look at rhinestones, you can say, oh, if rhinestones aren't money, they're nothing. Like, what is a rhinestone? It's a rock, right? If gold isn't money, it's nothing else. Like, what is gold? It's a rock too,
Shiny
right?
yellow
Shiny
rock.
gold rock, but it's still nonetheless a rock. But you wanting Bitcoin to be money does not make Bitcoin money. Like, it is a network effect. It is an emergent property, and it is emergent property stemming from its innate properties, that it is bearer, it is information, it is permissionless, and you can zap it around the world with no intermediary or third party or any gatekeeper. So you can't really say we want Bitcoin to be money. We need to make it money harder. And I see that a lot. Like, even I think in your notes before, you're talking about strategy and digital credit, but this is also a prevailing theme amongst the people that don't like strategy. They're saying, oh, wrapping Bitcoin up in this instrument, STRC or Strive with SATA or Metaplanet with Mars, it degrades the property of Bitcoin as money. But it really doesn't. It's not that because they did something, Bitcoin is less of it, less like money. And it is viable for people to use Bitcoin in any way they choose, right? Like, they can put it in an ETF. They can have it as a base asset, a digital capital, building digital credit on top of it. That's the nature of Bitcoin. And if Bitcoin can't do that, then there's something wrong with it. If it has to fit within a narrow definition of a small group of people that, it is money if you do these 5 things with it, then it doesn't really work as money. So you can see it's kind of like it's kind of a conflicting thing there in and of itself, the argument. Bitcoin is a very interesting thing. You just have to understand people in general. Like, Bitcoin is money to people. People put their savings in money. If they feel you're mucking around with it, of course there are going to be emotions running hot.
Samson Mow believes the next chapter of Bitcoin won't be defined by price alone. It will be defined by how artificial intelligence reshapes the global economy. As AI agents become increasingly capable of negotiating, trading, and transacting without human intervention, Mow argues they will need a neutral, borderless, and censorship-resistant form of money. That's where Bitcoin enters the conversation. While many assume AI will only benefit technology stocks, a growing number of industry leaders see digital assets playing a foundational role in machine-to-machine commerce. It's a bold vision, but one that's gaining credibility as AI and Bitcoin continue to converge. Let's hear Mow explain why this shift could be far bigger than most investors realize.
I think the future is largely going to be agentic commerce. Like, you can see where it's going already. People spinning up their own agents, and the language models are just a part of it. It's the agent with context and tooling that really makes a difference. And as it becomes easier to create these agents, and as the agents get better, smarter, and more capable, then it's just going to be a lot of agents doing commerce with one another and using services and paying with Bitcoin. Because if you think of it from a macro level, agents are unbanked, right? They can't really get a credit card or debit card. So they have to use either Bitcoin or USDT or something, right? That is permissionless.